Hey, what's going on, everyone? And this is Aaron Yoon coming at you from New York City once again. Welcome to another episode of my trading vlog here at YoonTube. And today, as you can tell, something very interesting happened yesterday that I had to deal with, and I figured I'd talk to you about today. And it's going to be the bigger topic rather than summarizing the trades because there weren't too many uh, trades that I actually took today, and all the profit that I was carrying over. The trades basically went against me, and I had to take small profits or break evens for most of them. So um, let me back up a sec and talk about what happened yesterday. So yesterday I actually had a an image that I can bring up here. I guess I didn't have it up. I guess I should have. Anyway, that's not important. Yesterday, yesterday I had a screenshot of all the positions that I was carrying over, and that basically maxed me out on my margin during the day. Now, the interesting thing with futures is that there's the regular trading hours margin, and then there's the maintenance margin, which is for depending on the security, it can be like double the amount. So, if, for example, if I need to have if I need to show if I need to have $500 to open a position during the day, that in order to hold that position overnight, it could be as much as $1,000 in my buying power that I require in order to hold that position and not get in trouble. Basically, margin call, for if you don't know, I hope you don't have to. It's like one of those things where I really hope you don't have to ever face a margin call. Um, but if you don't, you're probably not trying hard enough. It's kind of the same thing as getting a foul during a basketball game, or getting like a yellow card during a soccer game. It's like a no-no. You're not supposed to do that, and that's why there's like a penalty associated with it. But if you're not fouling every now and then, or getting a yellow card every now and then, you're probably not playing aggressive enough. So it is one of those things that's like scary at first, because there you do get like an alert and an email and all this other kind of stuff. And usually margin call is associated with losing money, but I got a margin call without losing money, right? So it is possible, and in this context, it's almost like the brokers are just protecting themselves. So my margin call came as a result of being spread way too thin. I think you saw my account balance yesterday. It was right around $6,000. And after today, I lost $200 today, so I was a little bit under $6,000 today. Although I am still holding a profit that I'm carrying over. I don't count that in my daily calculations of my wins and losses. I don't count profit that I haven't realized yet when I do that. So it's going to get a little bit confusing. My thumbnails and my tracking is going to get a little bit confusing because I'm not always out of my positions every day, at the end of the day every day, because I am going to incorporate more of my swing and day trading combined. We're doing some sway trading here. It's a new word that I'm making up because there's a little bit of both. So what the the what happened yesterday, and this is a result of sway trading, my version of sway trading, is that the required margin went up astronomically. Um, so if I had $5,000 to $6,000 in my account, that was okay during the day. But as soon as 4 p.m. hits and the day trading margins are over, and it's like overnight or maintenance or holding margins, whatever everyone calls it, a little bit something different. that kicks in, and now all of a sudden, according to like the computers and the algorithms, I might require, let's say, I don't want know what the numbers are. Numbers are not really. It's funny because like, I love trading, but I don't really like too many numbers, right? It makes my brain shut down and melt. So I don't know exactly how much I was over by. I just know that I got a notification for a margin call because theoretically, for example, if $5,000, $6,000 would be okay during the day, but to hold all that stuff, I might require like $10,000 or $12,000 in margin, right, or in equity, in order to be able to sustain that without getting in trouble. I don't see what the big deal is, but I didn't make the rules. That's just how it is. You know, brokers are the ones that hold the cards. They're the ones that allow you to play this game. So you have to, you have to give them respect, right? Like if you're playing your your basketball league in a certain, if your basketball league plays its games in a certain building, and that building is what allows you to have games and tournaments and everything anyway, then you have to have a good relationship with them. You have to abide by their rules. Just because they close at 10 and you feel they should close at 11, and so therefore you stick around till 11 and break the rules, that's just going to sour the relationship. So I don't really understand why the margin requirements are so drastic, especially when I was in profit for all of my positions. What whatever, like I don't really understand it, but it still triggers the warning, and it still triggers the margin call. So I got in trouble for it. So overnight I wasn't able to do anything except close positions. That's the thing with margin calls, is like it'll say, I should have taken a screenshot about it, but I didn't. I forgot. But what it would say, like if I were to try to place an order here, it would say something like order failed, order rejected, margin call, closing transactions only. And I was like, this is, at first I thought I wasn't reading the notification, honestly, because I just saw the red banner. I was like, oh, I wonder why I can't place an order. Like I must not have margin. But I like some of the positions went against me, and I got stopped out for a small profit rather than the profit I wanted, rather than hitting my target, or I got stopped out for a break even for the majority of them. So it was like I was holding maybe $600 in profit, but I only realized maybe like 100 or two or something like that. It was very, very disappointing. I didn't lose money, but it was very disappointing in terms of how much profit I ended up taking. Which again, I don't mess with the focus on the numbers too much. I focus on the process. As I say, like I sound like a broken record sometimes. I focus on the process. So I moved my stop. I protected my positions, especially because I was leveraged so much. I had like 5 or 6 positions open. And so I was very careful to manage, like, worst case scenario. I always think about worst case scenario rather than best case scenario. I think obsessing over how much and getting seduced by a best case scenario is where a lot of traders get in trouble and lose their they suffer one bad swing against them, and that just wipes them out and is really devastating emotionally and mentally. It's like disheartening. It's very difficult to actually come back from that, emotionally speaking. So for me, like I knew how leveraged I was. I was green through and through, but I wanted to be very, very mindful about how I'm managing where, like, I'm gonna get stopped out if the trades turn against me. And 4 out of the 5 trades went against me. Right, so I'm very glad that I did do that. So I don't actually so that's when I got really confused. I don't actually have any real losses. I got pretty much, I scraped together a little bit of profit, just a little bit, right? And I don't understand. I definitely don't have margin. I'm definitely not. It shouldn't be in margin call anymore because I closed out my positions, and like early this morning, like 6 or 7 this morning, I'm like, I still can't put in orders. This doesn't make any sense. So I had to actually call the broker. That's really annoying, right? You have to actually call the broker if you're with TradeStation and tell them, hey, listen, like I'm not, I was leveraged really highly, but I'm not really, I'm not in trouble. Like I'm not losing money. I don't owe you money, and that's the tricky part with whenever you're trading these leverage products like futures or options or forex, especially because the leverage is so high, you can actually lose more money than you had to begin with, right? So even though it's possible that I had I had $5,000 in my account, but it's possible if I didn't manage the risk properly that I would actually owe more than I lose all my 5,000 and owe the broker some more, right? Uh, um, there are measures in place to close out your positions, liquidate your account, even before it ever becomes that bad of a situation. But for me, it wasn't nearly that bad. It just kind of I was flirting with the border in what I believe to be a controlled manner, and then it kind of tipped over, and like I got called for out of bounds, for example, right? Because like it's like my like if in basketball it's like my shoelace was untied and my shoelace went over out of bounds, and I got a call for that. I'm like, what? Like I guess I should have tied my shoes better, right? So it's kind of like that. I didn't really lose anything or do anything wrong per se. I did feel that my risk was in control. I did know, but I was very, very mindful of what was going to happen in a worst case scenario, and it was like 80% of a worst case scenario, and I had to settle for tiny profit instead of substantial profit. So so this morning when I called TradeStation, they said, exactly what I'm talking to you about. They're like, okay, well, this is the only way. You have to talk to us. You have to kind of explain the situation. In this case, it's not really that bad because it's not like I took any losses or anything, or I all of a sudden owe money, right, to the broker, because I actually kept one position open. And that's this position right here. You can probably see the dot here, this euro, which is kind of just saving my portfolio right now, because it's the only one that's in a consistent kind of trend. Now here's the thing. Here's what really boils my blood, and like this is the lesson learned. The whole point of me doing swing trading is to be able to stack quarters on top of quarters and exponentially increase profits during a trend. Right? Trends are kind of rare, but when like 80% of the time the market is just going sideways, just doing like an up and down whipsaw seesaw kind of thing. But during the 20% of the time when there is a strong move, the people who can react the quickest and hop on the bandwagon the most aggressively, but also in a controlled manner. That's the trick, right? It's an art of being safe and aggressive at the same time. That's where the majority of the money is made. That's how I was trained. That's kind of the advantage of swing trading or longer term trading with quarters as a basic a fundamental point for entry and exit, and scaling in. A lot of people say scaling in. I like to say stacking for whatever reason. But I couldn't stack yesterday, even though I wanted to. I had 2 opportunities to stack right here. Let's see. I'll just put the right there and right there. Right. I want to stack on quarters, and this is 4 a.m. this morning. I wasn't up at 4 a.m. but I had a buy order here, or rather I wanted to place a buy order here, but I couldn't because of my freaking margin call. And not to mention the positions that I had open went against me. So I'm like, oh my goodness, like why can't I just it's just I mean, I do believe you got to get a little bit lucky uh, in terms of which positions actually move for you and which positions actually move against you. Like you got to give. There's a little bit of luck to this game. You can't deny it, right? It's just like in anything else, right? There's a little bit of luck in sports involved. That actually has sometimes usually the best team wins, but sometimes the underdog can get lucky, right? Sometimes the best team can get injured and get crippled, which is another form of bad luck for that team, and then which is consequently pretty good luck for the underdog team, for the team who's not favored. So I feel like there's a little bit of luck in play here, and it just happened to be that when these massive movements were happening in the euro, that was when I happened to get margin calls, so I can't stack the way that I want to. However, because of this very disappointing day, now I'm not going to forget. I'm going to remember. And if I don't have momentum in some of these larger quantity contracts, then I'm just going to cut it and look for the stuff that is in motion. I guess from Forex, I'm kind of used to being able to spread out and lay out my traps like in almost with for free, like without actually eating up and consuming any margin. And I fell into that kind of a pattern a little bit, and I was not able to get in on any of these, because look, right here is like the idea is I have two contracts running since this 1425 up here, so I'm up over 150 ticks on this. Pips, ticks, whatever. I'm up over 150 pips on this right now, and I don't plan on cutting or taking profit until I at least get up to this 750. So like I'll just move all this stuff up. If I do this, and I drag it, I can clone a new set of lines for. I don't know why it doesn't stay parallel. So the general idea here for me is, now that I've gotten some more lines drawn for bigger quarters, obviously the big solid red lines are big quarters. The dotted red lines are above a small quarter above and below. And my idea here is to every solid line add another contract. So as you can see, I had an opportunity to do it here. This one I just straight up missed, and I'm not. I'm very, very cautious of taking it at the red line, because I don't know if the red line is going to bounce the price back or not, because that's a lot of times where reversals happen is at the red lines. If you've been following me, you probably have noticed, wow, like there's a huge correlation between the red lines and it's slapping and spanking the price back in the reverse direction, right? So I'm very cautious of that, and I didn't know if I wanted to take it or not. Although in retrospect I should. If the RSI is this high above 60, I just take a shot, right? But I didn't. I wanted to see it break above a small quarter, and I saw this. I was like, okay, I can now. I want to on the retrace, right? Because the strong movements like this almost always have a retracement. On the retracement, I will stack a contract. And in retrospect, you can see that it would have been a beautiful entry to now I would have gained this much from this point to from this point to current price. The yellow area, I would have 3 contracts working for me instead of just 2, which means I'm accelerating my profit gaining by 50%, right? Because I actually had instead of 2, now I have 3. 3 is 50% more than 2, right? And then the idea further is to, if I break above the green line, to add another one. I couldn't add it. Although earlier I did actually have a buy order here before my orders expired, and you'd think I would have gotten filled, right? But look at this right here. Look at this. Check out this number right here, right? My entry was 1575, and the low came down to 1576. One tick. I missed the entry by one tick. So this is the kind of thing that happens. That it's just like, this is a game. I feel like this is a game of it's just gonna test how much disappointment and frustration I can handle emotionally before I crack. And I'm determined not to crack, but little things like this, I'm just like, oh my god, I couldn't add here, I couldn't add last night. So this is like my crown jewel position right now, right? This is like I couldn't add last night because of the stupid margin call, and I couldn't, I missed this one as well, because of the freaking margin call. This is 7 a.m. I saw this and I was like, come on, enter, and I couldn't do it, so I missed it. I got out of margin call after I made the freaking phone call to say, hey, just, release my account and make the status active again, make it tradable again. And I had the order in, and then it came back down all day today. I'm just kind of like watching this and waiting for it to come back down. It missed by one tick, and now it's bouncing back up and working. And the market's closed right now. Or no, it's actually after 6, so the market is reopened. But yeah, we'll see what happens. So that's really the point of today's video, is how I got a margin call. It wasn't really that bad, and how to deal with it. If you have TradeStation, you got to make the phone call. I tried to do an online chat thing while I was doing other things on the computer, but they forced me to call. Fortunately, there's like virtually no wait time. So I got a person right away. Usually these the bigger financial brokers, you're gonna get, like, TradeStation is huge, is one of the big boy players in this world. So you're usually gonna get someone really, like a human being, on the phone very quickly and get your issue resolved very quickly, assuming you know what you want. So that's it for today. I mean, I took a little bit of a loss, kind of a wash for the week, but I'm holding on to what was this? I'm holding on to $400 in profit over 2 contracts. If I had my way, it would be 3 contracts, or 4 contracts actually. In which case I'd be up. I don't know what the math is, but way more than 400. This is I'd have 2 contracts and 3 contracts off of this move, and then a 4 contracts from this small move, from this green to that. So I'm thinking probably another $100 in there, maybe. I don't remember. I don't know. All I know is that's the process is to add into your position a winning position and ride the momentum, ride the wave, if you will. Like a surfer. I don't surf, I never have, but I assume that you ride the wave for as long as you can. That's what makes a surfer good, right? It's the same idea here. I missed the entry. Part of me wants to just hop in right now, but that would be breaking my own discipline. So, and I also realized, geez, I need to set a stop here. So, okay, this is a good way to wrap up the video. My stop loss was also considered to be a day trade order, so you want to make sure that your brackets stick with your position until your position is closed, because that's the trick. That's a tricky part of TradingView is I can if I want to protect the position, I have to add. Okay, I'll do it that way. Actually, no, I won't. Because as I scale in, I'm gonna need to increase my stop. So here's what I'm talking about. I'm gonna make it so that my stop is down on this red line. Whoops. That's when I'm going to sell. And I'm going to sell 2 contracts. And I can't do a limit order, obviously, because it is too high. So I have to do a stop order. My bad. Stop order price, 15.25. Okay. Perfect. So now it's going to sell when price comes back down here. I hope it doesn't for a long time. I hope it keeps going up, right? Now here's the other thing. Since I'm talking about stacking, I'm gonna take another shot at this. I might be a little bit nervous if it retests, so I almost kind of don't want it to come back. But I don't really have any other orders right now anyway, so I'm gonna take a shot here. I'm only gonna do 1. I do want my stacks to be smaller than my initial position, so the loss doesn't eat up too much of my profits. So I'm only doing 1 contract here. And enter. Boom. Okay, so now if the price hits this 15.75, I am in for 3 contracts, and my goal is at least this 750, right? As along the way, I will lock in some more profits, but you know, I'm gonna demo that as it happens, not here today. Now here's a problem right now. If this hits, I am now in for 3 contracts, but I only have stop loss protection for 2. So when I add this, I also need to remember to increase this stop loss by 3. So now what's going to happen is if price comes back down and enters, I hope it just picks me up and takes me all the way to this green right here, where I will add another contract, right? I hope this 100 pip move is a nice smooth ride, right? Go Europe, you know? That's what I want. But realistically, I have to be prepared for a worst case scenario, and I give myself a 50 pip buffer of which is double the amount of a stop loss, which is, it might be too much, but I mean, I could move it up here, but I want to give it a little bit of breathing room for now before I do that. It's a little too close to the 15.75 for me to say like, hey, you know what? I'm nervous about this. You can see like this kind of whipsaw action. It took up like 50 pips worth of breathing room to just kind of settle itself and then continue onward, right? Fundamentally, I don't really see anything that's going to move against the euro because you know, they're talking about stimulus checks and all that kind of stuff right now. So I don't see any kind of crazy black swan event taking the price all the way back down. You know, knock on wood. Hope that doesn't happen, but if it does, I need to be ready. And now, like, if I get picked up for this, and then I'm gonna start losing ×3 instead of gaining ×3. So that's the drawback. I don't want any more than a 50 pip loss there, and I think that will actually be counted as a I don't know how to do the math, to be honest, but I think that counts as a 3-to-1 or 2-to-1 if I actually get stopped out. I will have profit, but I will have significantly less profit, but I don't know how much. I just know that I'm protecting myself, right? This is, again, I obsess about the process, not the price or not the money balance that I have in my account. It's all about what my pattern and my habits are. That's really the main focus. So that's really it. You know, there's just this one position that I have. You can see, like, I'm out of everything else. I had some. There was the crude oil news today. Crude oil just knocked me out like two or three times. That's why I have a negative $200 um, uh, loss today, right? Because crude oil just faked me out all kinds of ways today, and you can see that on the hourly. It's just like it's not above 60, it's not below 40. It's just like this weird kind of area. I did actually add this some more lines on the crude because I'm noticing that if I'm gonna play the S&P with small quarters for $125 per small quarter, why wouldn't I do that on the QM, the mini crude oil, where the stakes are exactly the same? So there's really no reason for me to not do that. So I'm throwing in these quarters there. It also means that with the S&P, I'm gonna take. It actually looks like a bigger move because the S&P moves slower, but every line is a quarter for me. So instead of taking half a quarter for a stop, I'm gonna take the full quarter, which is $125. That's right around like the maximum I can handle per trade, and it'll actually give me a lot more breathing room to stack quarters. So the same thing with the S&P. The idea would have been during moments like, even just this small move. It's not that small. It's a 100-point move, which is a lot. But even from this point, where you taking the green line here, I might not have actually taken this from just based on purely the divergence. Maybe, who knows? I might have given this a shot, but entry here, add a position, add a position, add a position. So that's 1, 2, 3. So it's the first entry, 2, 3, fourth entry, and right after a red line is when it's time to start like getting a little nervous and respectful of the red line. This is a minor quarter. It's not a multiple of 250. It's a minor level, but it's still a red line in this context because the S&P respects every dime, right? It's a big dime, right? Because it's 100. It's a multiple of 100. So it's a big dime, not a big quarter. But the S&P tends to respect the dimes because it just moves. It doesn't move fast enough to bump into quarters, the big quarters, that often. So you would have, okay, so 1, 2, 3, 4 quarters. You would have completed it. And I would have maybe looked for a fifth if it started breaking above, but the idea is nope, none of this worked. I take all of my basically a stop loss for at the 200 even, right? So I'm moving my stop up every quarter as I enter more quarters, and I'm in for 4 and I'm out for 1. I cut all the positions all at once, and that opportunity that never became necessary until this red line, right? So same thing if I were to this was a nasty move. I kind of remember this day, just kind of chopped up everybody, and then this was last week if I'm not mistaken. It was just kind of very, very boring until it moved a couple of days later. Same thing from right here again, 1, 2, 3. You would have never gotten stopped out on the quarter below. So you 1, 2, 3, 4, right? The entry would here be the 4th, maybe a 5th, but the 5th would be stopped out along with everything else that you have. Same thing here, like and then you have a whole week's worth of just boringness, right? Not whole week, maybe like, yeah, maybe a whole week. I don't know, right? Just and so like most of the time the market's not going to move. So this is the thing that I'm starting to pay more attention to. You kind of need to have a feel for it. You kind of need to have a like a nice like your finger on the pulse of the market to really be ready for the trend, because they come quick. They come as a surprise usually, right? Unless you're reading massive amounts of news and gathering information and whatnot, and you're able to really guess on a high level, which I am not, right? I am just playing off of the price action. So if you're playing it like that, it's a kind of a surprise, right? So you would have had the same opportunity a couple of days ago off the 200. You could add one, this is off the one. So you're in for one, add two, add a second, add a third. You didn't even get to add a fourth. You lose the third. No, technically you didn't get stopped out at all, right? You didn't lose the third, right? Because your stop would be here at this point, right? So that is the move that I'm looking for. I've been looking for it, but like I just got like lulled to sleep with the lack of action in the S&P, and then I missed it, right? So I just need to be better at being in for the trade and like attuning my senses to watch for that. It's not an opportunity that comes that often, because the market has to be trending strong for that to ever work. But I'm glad that I have the RSI tool that I learned about, just literally like a week or two before I started this vlog, is when I heard about the RSI tool and how to use divergence as a way to increase the odds of entries and exits, and like which direction you're going to take it and stuff like that. Right, so that's about it for today's video. It was more of a strategy session on margin calls and how to deal with it, more and not as much of a summary trade, or a summary of my trades. Not really much to summarize, just a good opportunity for me to reinforce and share that I am going to be looking for more quarters. And the way that I'm looking for them specifically is I'm looking for those 3-to-1 day trades and stuff like that too, in crude and in nat gas and stuff like that. Breakouts, I'm very mindful of those. But my bread and butter that I'm looking for the most is going to be stacking small quarters when the market trends. That's really where the big money is made. My teacher is the one who trained me that way, and I guess that's the style that I know. Long term, it's safer, but it requires a higher threshold of pain and disappointment in order to be able to handle that, right? And so for a long time it just bothered me so much, but I finally think I'm starting to get there. And that's what I want to share with you guys today. So not much of a day trading, a little bit more of a swing day sway trading kind of thing going on is what you're going to be seeing more of. Right now, see, I like the way the euro's moving. Go Europe, right? I like the dollar weak. I like the euro strong, and I hope this trend continues. So that's it for this video. Make sure you hit subscribe and follow for daily content just like this, and I'll see you tomorrow. Hopefully with some profits, and stay tuned for another episode from YouTube. Thanks, everyone.